Sweden's largest pension fund, AP7, has made headlines by officially blacklisting Tesla and selling off its entire stake in the electric vehicle giant. The decision marks a rare move by a major institutional investor, raising serious questions about corporate responsibility and Tesla's compliance with global norms. AP7, which manages retirement savings for millions of Swedes, said Tesla failed to meet its standards on human rights and labor practices. Tesla, led by Elon Musk, has previously faced criticism for anti-union practices and controversial working conditions in its U.S. factories. AP7's blacklist is part of its ethical investment strategy, aimed at excluding companies that breach international sustainability and conduct standards. The fund uses the UN Global Compact and OECD guidelines as benchmarks for corporate behavior. Tesla, they say, failed both. According to AP7, the decision to sell Tesla stock was not financial, but purely based on ethical governance concerns. As of now, Tesla has not issued a formal response to AP7's divestment and public blacklisting announcement. This isn't the first time Tesla has landed in hot water with ESG-focused funds or watchdogs around the globe. AP7's move may inspire other European pension funds and institutional investors to re-evaluate their Tesla holdings. For context, AP7 previously held billions of Swedish kronor in Tesla shares, making this a significant financial withdrawal. Swedish media reports that this was the first time AP7 dropped such a high-profile tech company over ethics. At the heart of the issue are allegations around union busting and unsafe conditions inside Tesla's US gigafactories. Human rights organizations have accused Tesla of neglecting fair labor standards, especially concerning warehouse workers. Meanwhile, Tesla continues to expand globally, including new factories in Germany, China, and Mexico. But ethical questions surrounding labor practices may become an Achilles heel for future international expansions. AP7's blacklist also includes other companies, but Tesla's removal is attracting the most global attention right now. Back home, Swedish citizens have mixed reactions. Some support the ethical stand, others fear long-term investment losses. Financial analysts say this decision could impact Tesla's image more than its stock price, at least in the short term. Still, institutional moves like this can influence regulatory discussions and public trust in a brand. AP7 has clarified that they are open to reinvesting in Tesla, but only if it improves its labor and governance policies. Elon Musk, never shy of controversy, has previously clashed with regulators and labor unions alike. Critics accuse Musk of undermining union efforts and fostering a hardcore work culture that pushes ethical boundaries. Tesla's removal from the S/&P ESG index last year already signaled broader concerns in the investment community. Tesla has also been scrutinized over its supply chain, including lithium mining and battery material sourcing. AP7 has a strict policy of annual reviews to assess whether companies meet their sustainability commitments. The Swedish fund says it had engaged with Tesla multiple times before the final decision to divest. Tesla reportedly failed to respond satisfactorily to key questions around labor representation and worker well-being. This divestment adds pressure on Tesla to revise its corporate governance if it hopes to retain ESG-focused investors. Meanwhile, other automakers like Volvo and Volkswagen are gaining praise for better transparency and labor cooperation. ESG investing isn't just a buzzword, it's reshaping how trillions of dollars move across global markets. Investors today are not only concerned with profits, but also with the social impact of their portfolios. Tesla's bold innovation often overshadows ethical lapses, but that's becoming harder to ignore. The automotive world is watching this closely. Will Tesla adapt or remain defiant? Elon Musk's vision for the future includes AI, Mars, and autonomous cars, but ESG demands may now test his leadership. Some experts suggest this move by AP7 is just the beginning of a larger shift among global funds. With mounting pressure, Tesla might soon need to publish a new human rights policy to regain trust. Ethical watchdogs are urging more transparency from tech giants that operate at Tesla's scale and speed. Tesla's defenders argue the company is targeted unfairly and that no rapid innovator can avoid criticism. But investors like AP7 are proving that even tech darlings aren't immune to ethical accountability. Some media outlets speculate Tesla's stock may see short-term dips, but long-term effects are uncertain. Despite this, Tesla's growth in markets like India and China continues to accelerate. But future partnerships with governments may require proof of stronger ethical practices. Tesla's brand has always been polarizing, admired for vision, critiqued for execution. For AP7, this is not a political statement, but a policy-based move rooted in documented violations. The Swedish government supports AP7's right to act independently in enforcing its ethical charter. Other Nordic pension funds may follow suit, given the region's strong ESG track record. This case could lead to ripple effects across Europe, especially in countries prioritizing sustainable finance. If Tesla responds with positive changes, it may yet restore trust with institutions like AP7. But ignoring the warning signs could alienate billions in future investment. Tesla's innovation engine is unstoppable, but can its corporate conscience keep up? As retail investors watch from the sidelines, they're also rethinking what growth truly means. This story isn't just about Tesla, it's about the future of ethical capitalism itself. From Sweden to Silicon Valley, investors are demanding more from the companies they fund. Tesla's next steps will define its image, not just as a tech leader, but as a corporate citizen. Will Elon Musk take corrective action or double down on his approach? The world is watching. AP7 has made its stance clear: innovation without ethics will not be funded. This decision may become a case study in business schools around the world. The ESG era is here, and companies must evolve or be left behind. That's all for today's analysis. If you found this informative, please like and subscribe for more breaking news coverage. Thanks for watching.